also have a look at cattle markets this week with Oklahoma State Extension's Derrell Peel. Commercial cattle slaughter during 2015 was the smallest since 1963. USDA statistics released last week show the total was down 5% from 2014, but live weights were the heaviest on record. The process of rebuilding the U.S. cow herd is difficult to predict, as the USDA didn't release its usual July inventory report. The only data of the year came in January. There is an abundant supply of beef in the country. September's cold storage report showed a record high amount for the month, with data dating back to 1932. The export market showed positive signs in August, as total beef and veal shipments were nearly 30% higher than August 2015 and the highest monthly total in 2 years. We talked with Derrell Tuesday morning and began by asking about current price movements in live and feeder cattle markets.
Well, I think there's a couple things going on. One is, of course, I think we went too low this fall. We've been in kind of a real bearish, scared kind of a sense for the last couple of months. And so this market took a long time to kind of find some footing, and it was kind of across the board, but we've seen that now. So we're seeing fed cattle prices improve a little bit, feeder cattle prices have ticked up, and boxed beef prices have begun to improve a little bit.
I should ask about what we're seeing for the current expansion or the rate of expansion with heifer retention numbers and cow slaughter numbers. Does it tell you anything about where the industry is?
Well, you know, of course, we didn't get any mid-year data, so we don't have any official numbers, but if you look at heifer slaughter numbers have increased through the year. Early in the year, they were still down year over year, but they switched to being above, and really for the last half of the year so far, they've been double-digit above a year ago. On the cow slaughter side, sort of the same story. Most of the year, beef cow slaughter has been above last year's record low levels, at least record low as a percent of the cow herd. So, you know, you look at that, it's pretty clear we're slowing down expansion. There are people suggesting that expansion has stopped and maybe even that we're back in liquidation. I really don't think that's the case. If you look at the cow slaughter rate and what we project to be at for the whole year by the time we get to the end of the year, we still have a net cow culling rate that's less than average in the U.S. It's not as low as last year's record low was, but it's still below average. So I think, you know, it's pretty clear we're still expanding the herd somewhat in 2016. Much as we had planned, it was already in place. I think the bigger question is how much have we slowed it down, perhaps even stopped it going into 2017. That's a little more difficult to call. I would look for still limited but very small expansion in 2017.
What do you think margins look like right now?
Well, you know, obviously it depends on who you are, as is often the case, and they've switched a lot. Cow-calf producers, which enjoyed extremely strong margins here for the last 2 or 3 years in particular, obviously now are feeling the squeeze with these sharply lower prices. Again, somewhat lower even maybe than what they really needed to be, in my opinion. But, you know, stocker producers, it's been really hard this fall to get stocker demand jump-started. And yet if you look at feeder cattle prices, there's actually a fairly strong incentive in terms of the gross margin potential for stocker producers. The market's sort of encouraging this bigger run of calves that we have this fall to not come to town too fast. And feedlot demand has been pretty weak for lightweight calves, fairly stable and for the heavier weight calves, and all of that translates into an incentive for cattle to stay out in the country. So there's margin potential for retaining calves in a stocker backgrounding program as well as for the stockers. Feedlots, of course, are struggling again, have been until at least this last uptick in fed cattle prices. It's been tough for them to get that, you know, get those margins rebalanced for them. Packers and retailers, of course, are enjoying strong margins right now, with the supply pressures weakening their input costs in both cases, and still, you know, slowly adjusting down those output prices.
Let's talk about one of the positive aspects. Export demand in August was very good. We saw big increases to Japan, South Korea, and Mexico. Any particular reason why?
Well, I think it's basic market forces at work. Prices are lower in the U.S., so we would expect to see demand in the international market recover in terms of the quantity will move at lower prices, much as we see in the domestic market. And so that's fundamentally it. And supplies are bigger. So, you know, we have more product. We have it priced more reasonably as demand works. And, you know, we're still fighting a bit the headwind of a strong dollar, but the strong dollar doesn't usually completely offset market forces. It has the potential to either moderate or accentuate those, and it's certainly still moderating, providing some resistance to those exports, but we're seeing the export demand recover pretty much as expected.
I should ask to close out with, what is international production like in other countries? What are they putting out for beef?
Well, you know, one of the bigger changes in global markets is in Australia. You know, the situation in Australia has been unique relative to the U.S. market in particular. Australia has gone through a serious drought that was about 2 years behind the drought in the U.S. So they're really kind of doing the same thing we did, but a couple of years later, in that they had a couple of years of forced liquidation, which increased production. It coincided with the high prices in the U.S., for example, and provided an opportunity for them to greatly increase exports in 14 and 15 into the U.S. Now they're on the backside of that with some drought recovery going on. Their herd is at a 20-something year low. And so beef production is restricted and will be restricted for the next 2 or 3 to more years longer as they rebuild this herd. And so they're in a reduced supply situation right now, and that's going to give the U.S. an opportunity, as our supplies are already growing, to step into those markets in a little bit bigger way.